Hello, Warriors. Who's ready for the Consumer Pain Index? You guys ready, AJ, Brand, team? How's it going?
Morning, mate.
Hey, how are you,
up,
Ryan?
man?
Hey, Coach. It's the Three Musketeers again today, huh?
Mm-hmm.
All right, all
Woo.
right.
That are
So,
the three Stooges.
Yeah.
nah. So, so far, that resistance level, you're talking about 620, just took it out, and right now it looks like, could go either way. You know, I look at the Dixie, are we going to hold here and rally from here, or is there a bounce and then one more pullback towards 460? I guess that's the question. I think gold might be putting in some type of high here. We got up to this prior major support, so we're in this zone. I'm not saying short it, but if you bought the divergence intraday there, what a great trade. Take it. Silver's acting a little weaker. So what's your take before the CPI? The yen, it kind of answers the question yesterday and broke out this little formation, Ryan. Does it have 150 in it?
It's a tough to see it. I mean, it couldn't get through that 149, 20, 30 area.
Yeah.
That was my watch level. That's immediately after that intervention drop. That was where the sellers came in. We had the pop above up to 50, whatever it was, 54 on the NFP last week. Then we come back today and 2030 is resisting again. It needs to get over that. I'm in the same boat as I was yesterday. I think the dollar gets sold on strong data. This rally in dollar yen came after the data yesterday, part of a little bit of risk on because it was confirmed Iran had nothing to do with, or supposedly had nothing to do with the stuff going on in Israel and whatnot. So risk got a little bit of a boost on that. Everything lifted. But
crude filled the gap perfectly after that. Literally, within a tick. It was awesome.
And you know what? It looks okay. I mean, even if you're bear, this could have been A, B, C, maybe back to the breakdown at 87, at least for a starter. Is that what you're thinking, Blake?
I'm not an Elliotician, but I tell you, it had a nice triangle pattern, which we talked a lot about in the chat room, and then it broke down out of the triangle. You can see it right by your cursor. Well, I'm sorry, it was you can see when it broke down. It was a triangle, like a literally triangle pattern. Broke down, completed the triangle. Thanks to Ryan pointed out. I was actually away from my desk, and Ryan's like, "Oh yeah, there was a headline from New York Times, and that's what took that down, took risk up, right, Ryan?" And then it was like boom, bang, bang, bing, bam, boom, right there.
Yeah, exactly. I think this is the biggest story if it holds. This would mean that the bottom's in gold, right? If we have a turn, you would think. But this island bottom held so far. So you have a lot of people stuck on Fed Island here. We'll see what happens. A lot of shorts, trapped.
I have a nice pattern setting up on the 10-year that I'll show you guys in a little bit. Based on today, especially if we get a strong data today. I think it's a great setup for those of you that trade TLT or trade the bonds, trade yields, whatever you want to trade, whatever instrument you're trading there.
Be alert for a potential outside day to the downside in S&Ps. We had an inside day yesterday. We're right at the C. As strong as it was, we were inside of yesterday's, the previous day's range. So I think that there's a possibility of an outside day. We'll see how this comes in. We could still go over 44, 44.20. But again, here's Amazon. So I mean, compared to the retracement we've had in S&Ps, it's been nothing. Here's Apple. It's retraced 38% back. Here's Microsoft. We may end up with a false breakout of this triangle. It's called about 2 lower, and that's about it. What are you thinking here with euro? I know you're thinking higher. You want to buy a break in euro, say we pull back to 105.5, or do you like cable better, Ryan?
Yeah, I like the euro at the moment.
Okay.
Cable's gonna move with everything else, but I like the euro on a dip. I was looking for it yesterday. It only
What
dipped
levels?
to 80. Well, from
550?
here, yeah, from here maybe around 50s. But I might
Okay.
even hit that 70, 80 area again, where it pulled
Okay.
back to yesterday before bouncing.
All right, so we pull back to, like, this area and then make another move towards 107.
Yeah.
Yeah, this is still just a trade. You're not declaring this a bottom, are you?
No, I'm trading it because it's looking like it could be a bottom.
Okay.
I'll happily buy it down at 105 again, depending on why we go down there. But yeah, this will just be if it is going to bottom, I'm just going to just edge in, try a little short-term trade and see how long I can hold on for it. And if I can hold on for it for a while, then so be it. Me, I like to stay in a winning trade as long as I can.
Okay. Kiwi looks like it may have rolled over, took out the stops here over 60.5. That was a great trade idea I got from you, Ryan. At 59.30, I took some heat, but it worked out. I got out yesterday. So,
Nice.
the commodity currencies look like they could wash to new lows.
Yeah. There was quite an interesting. I don't think you've got it. Pound Kiwi is looking interesting, and someone highlighted Pound Swiss as well.
All right.
Real doozy of a level. I don't know if you got those, but if not, don't worry about it.
China's the yuan has really turned sideways and quiet.
Yeah, I've still got half a mind that they're both sides of the trade in this one. They get the banks selling anytime it rallies, and then they probably tell their banks, okay, it's dipped, you can buy your dollars back.
Okay. All right, Blake, let's see that 10-year formation. I'm thinking that yesterday you said we were getting close to the double top projection for a target, and
I'm gonna get to that in 1 second. I actually have before we get started, I want to do, or we've been starting before I get started. How about that? I need another cup of coffee. I just wanted to say next Friday, not this Friday. So we're talking the 20th of October. We're going to have a new team member joining our ranks, and this person is we wanted to make a proper introduction next Friday. So I urge all of you to be around next Friday after the F.A.C.E show, after Dale wraps up our show here, and depending if he has an interview or not, make sure you all stick around. It's going to be pretty exciting, it's going to be pretty cool. I just want to make that announcement. It's always nice when we have a new team member coming on board. So with that being said, just real quick, Dale, you were talking about gold. I just want to show you, the update this morning in gold here. There's that previous support, current resistance. You can see intraday RSI is pretty overbought on a 4-hour. That is really key. And I mean, look, if you're a gold bear and a dollar bull, this is your opportunity. But I have to say this, and I want to be, I want to say this kind of aloud. The dollar, it really acts like crap, doesn't it, Ryan?
Yep.
It is trading like it's trading like shit. I mean, let's just call it what it is. I mean, it's below its channel. It's in the middle of a pullback. You can see it's probing some. I think you can see the green line here. Pretty big support. It's not even close to a 38% retracement of this entire move. I don't even have it drawn out because I know it isn't. And so that means there's some downside here. If they want to sell dollars, we could trade down to 104, which would be that previous. Whoops, I did not want to do that. Let me change that. There we go. That previous channel that we had talked about for ages and ages, that looks doable on any breakdown. That would put the euro back at 108, something like that. And I'm just throwing that out there in case we get a weak number. But going to your comment about yields, we got this PPI number yesterday. Came in, you know, nice and toasty, and the dollar did not follow through. By the way, I shorted some euro yesterday, shorted some sterling around 123.30, covered up those positions already. You know, not getting a lot of bang for my buck there. Just, you know, took a little bit of a loss on the euro, to, you know, made a few pips on the sterling. I just kind of like, all right, well, let's see what happens today. But I want to show you in yields, you know, we are getting that pullback. We've got that double top that's pretty much played out, right? Okay. You know, again, Dale, we say the close enough for government work, as you love to say, or, you know, horseshoes and hand grenades, close enough works in technical analysis too. So I'd say we completed. Now, if you look at the bond market and you look at the 10-year, I think we could set up a nice inverted head and shoulder pattern, because we are in, let's not ignore the fact that we're in a very, very big downtrend, but I think the lows are in for near term for TLT. And it's not because I'm a huge bond bull right now. That's not the case. I do think there's going to be a lot of issuance as we go into the second half of the year, into the end of the year, and into the beginning of next year, which is going to keep downside pressure on the bond market. But based on what's happening in the Middle East and what's happening with, you know, the dollar and what's actually happening with data, we continue to see, you know, data, you know, potentially, you know, keeping the bond market under pressure, or allowing the bond market to yields under pressure, excuse me, the bond market to firm up. I think we could have a nice little inverted head and shoulder pattern. So on strong data today, that would allow for the bond market or the 10-year to pull back a little bit. And if we can hold above 107 or so in the bond market, I think we set up a nice inverted head and shoulder pattern on strong data, because you already see that the dollar is underperforming, right? That's pretty glaring at the moment. So that would mean that any rally in the dollar is probably going to be met with selling. You know, today, tomorrow, early next week, we'll see how that pans out. But and that's just assuming we get strong data today. Ryan, is it a shoe-in that we get weak CPI data today?
Is it assuming we get weak CPI data?
Yeah, is it a given? We get weak CPI? Well,
yeah, you can never draw a direct line from PPI to CPI. PPI, you know, tends to lag a bit in terms of what happens in CPI. We're expecting a dip. The market's going to have a little bit of a readjustment after that PPI data. So for me, it makes the risks both sides. If it comes in hot, the market would be expecting it, but that has connotations for the Fed and rates. If it comes in softer, much softer, then PPI gets blown out the window. And yeah, you know, we're in selling dollars and soft landing territory. So yeah, I think that there's the risks of two-way for the price risk today, but it's got to really be, you know, over and above 2 pips either side to bring a big move.
Okay,
hey guys, I know we don't talk about it, but I bet there are people watching that are, you know, holders of Bitcoin. And I've been tweeting out the fact that with risk on that we've had, you have a big descending triangle in Bitcoin. And we're on the verge of breaking down under about 25,000. That measures 19. So if you just draw that line, there you go. So that's what I'm seeing here in Bitcoin. And it didn't make much hay with risk on, dollar coming off. There's something wrong here. So you're wrong over that line.
And look at Ethereum. Ethereum,
it's at new lows.
That thing's about ready to break. I mean, and oh, hey, we got Ethereum ETFs, and hey, we got Ethereum this and that and the other thing, and hey, you know, those guys are going to about ready to get smash-oled.
Well, I hear, what's the name of Warren? Okay, Senator Warren has a new ATML bill for crypto, so that people can't do anything anonymously anymore, and that could You put those kind.
That was the whole purpose of it.
Right, but you put that kind of stress on these platforms or to comply with that, there are going to be a lot of issues. So anyway, Warren wants to know if we're all regular. Okay, she wants to know everything.
Hey, I'm regular twice a day. I'm regular.
Yeah, good.
Did you want to know that?
Yeah,
Did you need to know that?
Some mirror. If you're not, I recommend Miralax.
It's right around 8 a.m. ish. Oh,
right.
I'm sorry. You got it's way too much information. All right, so let's
Standard Chartered are calling for 8,000 in Ether by the end of 2026. That's a bank.
8,000 for Bitcoin?
No, Ether.
8,000 for
wow.
Yeah,
I better buy it right now.
By when?
End of 2026, and this is a bank calling that. This isn't one of your crackpots.
Wow. Well, they're going to find themselves, if they liked it at 1,500, they're definitely going to like it at 1,200, right?
It looks like like we could trade at $1,000.
Hey, I got a comment earlier, just from let me see. It's about the Aussie really quick, and I want to share with you guys some analysis here. Any reason why this is from Abuth? Excuse me if I mispronounce your name. Any reason why Aussie is weaker today, despite stocks higher with dollar flat and Australian inflation expectations came in higher than expected? First of all, I'll just say, as far as the Aussie goes, technically, this is what you'll see, that we are making lower highs, and we've had a hell of a recovery. It's diverging a little bit, but you can see how vulnerable it is. We are literally sitting on support, and we start breaking through 63.85. That's going to put some downside pressure on. I don't have a good answer on why the Aussie is lower. I'm long Euro Aussie, so I'm short Aussies right now. Me personally, that this is a trade that I'm in, because I'm looking for higher prices as we've moved out of this channel. But I don't really have a good answer on the Aussie. How about you, Ryan? And any you sniff out anything here?
If we're talking just sort of intraday, I mean, it's not it's not that weak. It's not, it is in a downtrend. It hasn't quite turned it around like the Kiwi has, and some of the other pairs, But we've got this short term from October. It's moving up, but it's got a lot of work to do. And until it gets above 65, 20, 40, it stays in the downtrend. Inflation data, I think the gentleman's referring to, was the Melbourne Institute expectations thing. So I'm not sure there's much weight put onto that one. But yeah, I mean, the Aussie, it's looking the same as all the other pairs: euro, dollar, cable, everything against the dollar. This is all a lot more about the dollar weakness than Aussie strength, euro strength, pound strength. Although, as I mentioned on the Flow show, if China's turning the corner and stimulus is seen in a positive light, that can have a kick on into Aussie dollar, as it can the Kiwi. But for now, the trend is pretty clear. And until we start breaking some of these lower levels, like the 65s, it's still in a downtrend.
Yeah, and I'm not sure if I mean, I've been focused on this long term. Like, this is post COVID lockdown. Like, holy shit, where everybody's gonna be wearing gas masks for the rest of their life. Remember that move, right? All the video coverage of people dropping dead in China. That was that right there. On the streets. Remember that? You can see we basically backed right up to that trend line again. And maybe that's, giving it a little bit of a stall. I don't know. The Aussie dollar to me has been not the best trading vehicle. I've been more or less trading the range. So as it spikes up, I short it. It comes down, I start to buy it again. And I think that's, until we get some decisive moves out of the equity markets, I think you just kind of gotta play the range a little bit. Anyway, thanks for answering or asking that question. Tony wanted to look like a rock star, shorting the NASDAQ up here. And I'll tell you, Tony, I'm very much in tune with this resistance coming back into play. This is if you look at it you know, I this was like one of my setups last night for my trade-off, or for the trade-off show that I did with Chris Weston from Pepperstone last night. This is a you know, we might be at the top of a flag, and you got to think about this. This is scary, you know. If this is a flag, do you know where this goes, Dale? You don't want to know. I mean, literally, if this thing starts,
oh yeah, oh, you mean if it breaks out to the upside, like,
I mean, we're talking
18,000?
we're talking 127% extension up to 18.2 or something like that. Yeah, I mean, it's
Could happen.
It could. I mean, I've seen crazier stuff, you know, but you have a bunch of lines or stars that are aligning today, right? Is that correct?
The eclipse is the 15th.
Okay,
So
my Twitter stream was swarmed with astronomy stuff. So tell us what's up with that.
Some guy, Tony, does even more stuff than me. He said, I know Blake makes fun of you about this stuff, but I have this and that and that. So I was looking for whatever it happens going into the end of the week, early next week, for some turns. So, you know, it could be either side of the eclipse. So I'm thinking, you know, 2 days either side of the 15th. So it could, you know, we're in that window now for reversals between now and Tuesday. So
all right,
that's how I'm playing it. So whatever has been going down a lot, look for lows. Whatever's been advancing a lot, look for signs of a high. That's how I'm playing it.
Okay. All right. Well, let's you know, real quick, let me go through a couple of just some quick analysis with you guys so you can see some of these pairs. I think is important. So the dollar mex continues to bleed lower. We are just below the 200-day moving average. You're going to see some support coming right into play right around where we're at, which, remember, it rejected a big channel resistance longer term. The Swissy, the double top is still playing out. We got trend line support coming into view. Also, you can see the 38% retracement is coming into view. So a lot of big support in some of these dollar pairs. The Aussie, you know, obviously we just talked about it, channel support. We start getting much lower than where we're at. You might see some, you know, bleeding of the Aussie dollar. I think on a strong CPI data, that Aussie is going to be a good play to the short side, because I think the dollar is already got some momentum going against the Aussie. So, you know, you see some you know, dollar strength here, you know, which we haven't seen on, you know, as of yesterday, we hadn't seen any dollar strength following that strong PPI data. If we get strong CPI, the Aussie could be a play to the short side. Cable's got a nice setup, I think, because we are backed right up to a descending trend line, but also at some pretty key resistance. So you can see that, and let me just, I'll show you in the live charts here. So I've kind of drawn it out for you guys. You can see it here. Let me zoom in. So your support would be this red line. You can see it. Whoops. I did not want to move that. Let me go ahead and readjust that. Let me grab this line. There you go. That one right here. This line, as you can see, it's your breakout point, right? So that comes in at 122.70. Your resistance is this descending trend line. You can see it right here. That comes in around 123.60, roughly 50, 60. So we've got, you know, this wiggle that you can see right here, you know, between 122.50, 60, or 123.50 or 60, 122.70. We happen to be, as usually happens, just before some big data, you find yourself smack dab in the middle of a range, right? Here's the top end of the range. Here's the lower end of the range. We're right in the middle of the range. So, you know, strong data, strong CPI could push the envelope towards support. Weak data, you know, we start probing resistance, and that's not the only pair that would be happening. You take a look at the let me get rid of that. You look at the euro. We're right up against channel resistance here. Here, let me zoom this way. Okay, you can see right up against channel resistance. We start getting above 106.50, and we're going to squeeze, because there's that previous support. There's resistance there, the rejection, Yesterday was a rejection, and we're holding it. And that's why I covered up my shorts, even for, you know, I took like a 15 pip loss today because I'm like, okay, well, I can clearly see if this thing breaks out, you know, we are going to get a move here, you know, and the flip side is strong data. We got good risk reward to be short. I mean, you know, on a you know, putting in some fresh shorts here. I don't see any reason why we won't. Anyway, just a few setups with the dollar. As I said just a moment ago, gold's right up against resistance. You can see it there. I think this is a great setup because if we do break out to the upside, we should see 1900 this morning on a breakout on weak data. And you know, if we got strong data, bonds come down, yields go up a little bit. Maybe it gives us an inverted head and shoulder pattern. So I think there's something for everybody. And now we have to just wait for the data. So Ryan, what's your best setup going into this news today?
Yeah, same as it was yesterday, really. Still a dollar rally. And like the euro-dollar's sort of come to the forefront. But again, I'll be looking at dollar CAD if it gets up to 136.50-ish, and maybe dollar yen if it moves up as well. But euro-dollars is my watch list at the moment.
Okay. You know, I think the euro's set up really nice. And by the way, I didn't talk about the dollar yen because I'm kind of done talking about it, because it's like it's holding that the spike low. We're not even getting below 148.50 in any meaningful manner, but that spike low to 147.30 or whatever it was, we're not even getting close to that. You can actually take this and do that, and we can't get above 149.50. So I think we're kind of trapped here, but who knows? I mean, this thing could move, you know, it could move on a big print, right? Big print either direction, really. So Dale, what are your thoughts? What are you looking at?
I'd like to see the yen challenge at high, break out through that rectangle you're talking about, and I'm looking for a top, kind of coincides with that with a shift in rates. So that's what I'm looking for.
So
you know, maybe 150.50, something like that. 151. Where's your black
Dale,
line?
you're looking at this?
Yeah.
Wait, hold on.
Well, I don't know. You got my spaghetti
hold
line.
on. Wait, hold on. Are we going to zero or after that? Just kidding. I'm
I
joking.
think
I'm joking.
You know,
I'm joking,
put up
I'm joking,
the weekly 120 is viable. Put up the weekly.
Yeah. So you see us doing that. Wait, hold on. Did we go all the way there? Wait, did we go to zero?
The weekly moving average 120.
Okay. Yeah, I mean, we got the 200-day comes all the way over there. That would be a hell of a move. I think the DOJ would definitely have to be moving in that situation, right, Ryan?
Yeah. That will include risk off.
Yeah, some shit.
You know what? You say that risk off. I will, and I'm going to play K-Man for a second. We haven't seen any of that, and you know,
we haven't had much risk off.
But I don't know. We sold off like 6, 7, 8% a couple of weeks ago, and the dollar yen did that. It went up.
Yeah.
So it hasn't shown its fangs yet in any type of risk aversion, but that doesn't mean it won't, right? I mean,
not everything has to happen all at once.
Everything all at once.
It doesn't have to happen all at once. That's
right.
Happen. They could be synchronized and have time lags.
That's right. Okay, so I have the dollar index. Actually, you know what? I'm with you, Ryan. I'm going to put up the euro. The euro's kind of got my attention right now. Also, the cable. Any type of dollar strength, and I actually want to short the cable, but I'll just leave it on the euro right now. Here's the euro to the left, S&P right in the middle, 10-year yields right here. Here's your data flash. We're going to put it right here so we can see that. And we should watch jobless claims just in case we get a tick higher today, like, you know, up towards 230. I don't think that's going to be the case, but you don't know. Weekly unemployment claims is the best view we get on labor data each and every week, and the most real-time data that we can get here in the U.S. And we all know that the labor market, you know, is at a point where anytime, you know, we could see it turn. And I'm not saying it's going to. I'm just saying
it's out there. It looks like a leak.
We are seeing yields come down.
5 seconds.
Yep, here we
If
go.
someone already had it.
Here we go.
There's a rally in the euro. Now, there's your break.
It's in line. It's in line. 3.7 CPI, 4.1 core CPI.
So not much of a reaction here. I mean, we got the euro trading at 106. I mean, yields are popping. I mean, maybe we get that, and the Aussie's starting to break. Maybe we get what we were just talking about with the 10-year. Let's just go revisit that real quick. You know, let's go over to yields real fast. So you see that pop in yields because we completed that double bottom, right? Maybe we get that inverted head and shoulder pattern. So you know, this might happen. This might happen. So keep an eye on the 10-year. If we dip back down to 107.15 or so in the 10-year, what do you make of this data, Ryan?
Yeah, jobless claims as well, as expected, 209k versus 210k expected. So still no problems there. Although continued claims did tick up a bit. Maybe there's a bit of skewy in there from all these strikes and stuff. But the CPI is all right. It's not gone up as maybe people were expecting after the PPI. The core has come down. I'm not sure why the dollar's rallying on that. I've picked some up, some euro dollar up at 04, and I'll buy a bit more at 80.
Wait a second. You went long at 04? I went short at 04.
He said he was looking to buy a break all morning.
Yeah,
I got short at 04. That's the price that I got filled at. So
well, there you go. You're 13 pips up, and you tell me when you get out, and
I'm gonna get out right now for 14.6 pips, 15 pips actually. By the time I closed it, yeah, I just closed it. So anyway, that was it for me. I'm done. That was my big shebang, because I actually think that you do play the way you're playing it, Ryan. You play the euro on the long side, but I'd play it. I'm going to play it somewhere down here if I can get it somewhere down in this.
Yeah, I'll add at 80 and a bit more. But if yields do take off here, what's that 4.7 level? That's going to be the marker. But yeah, right. We'll see. I know Dale's got his guess, so let's not waste their time on that one.
Yeah. All right. Well, we have a great guest today. Dale brings in the most beautiful woman in financial markets. He brings in Mish Schneider. So Mish, welcome to the show. Dale, I'm going to hand it over to you. Mish, it's great to see you.
Nice to see you, and thank you so much. It's good to hear at 6:30 in the morning, my time.
Woohoo!
And Mish, I'll get you Blake's address. You could send that poster to his house.
Yes, please.
I'm sure
you'll be right next to my Heather Locklear poster.
Yeah, I'm sure his wife would like his collection that he has there. Anyway, welcome back.
Dale,
back, Mish.
Dale, I've seen your collection. Don't go there. Just
all right. Anyway, we'll keep all of that in the closet, and let's break out what's happening in the markets, Mish. What's top of mind for you with what's been going on, the backdrop of the tragic war, and it's heartbreaking every day. You can't get away from the coverage. Kind of makes it the market seem a little bit secondary, but what are you thinking in here about different markets?
Well,
what's
yeah,
top of mind?
You expressed it perfectly. There is two mindsets right now: the humanitarian mindset, which of course is heartbreaking, and then the mental mindset re-switch to what's happening in the markets, which you can say is a disconnect, obviously. And so this is really when I think the technical analysis on the charts give me the most comfort. And a lot of things happened in place before the situation emerged over the weekend. I think the biggest thing was that as the market was correcting, we saw two very key, one index and one sector, hold an 80-month moving average, which is important. Yeah, because that's the 6 to 7 year business cycle. So if we look at the small caps and retail, my granny retail, they are, to me, probably the most telling in terms of forecasting what's going to happen next. And when they landed on this line in the sand, if they had broken down below, I think the conversation would have definitely changed more to a recessionary tone. And certainly in my case, the stagflation, which I'm still all about. But they held, it was clutch. So when I went on media last week, I was talking about if it holds, this is your line in the sand, and you could probably go back in and buy. And that's exactly what we've seen. And of course, what's going to go up the most in our narrative of since 2021 is going to be the growth stock. So we have seen that as well, the Magnificent Seven, if you will.
Do you believe in their reemergence and they're going to make new highs here, Mish? You know, Apple's still way off its highs, about $20. Amazon still about $18 off the high. This rally to bears would look like a rally to sell in Amazon.
Well, what's so interesting?
I'm speaking of me.
Well, if you want to look at it from a pure mathematical standpoint, we have these quant models, right? That we have a ton of them. We have at least 7 to 10 different models with blends. And yesterday, the models got into semiconductors again. And they had been in, they took profits, got stopped out on the way down, profitable stop because we got in early, and then reemerged into them. Now, that doesn't necessarily mean it's right, but from a total trend strength indicator standpoint, it's telling you that they are still the supreme beings of the market, being AI and tech and semiconductors. Clearly, we can see why there's obviously going to be a need globally for AI and tech. It's what's running the world, regardless of what's going on geopolitically. And in some ways, it's become a flight to safety as well. Can it sustain? We get back to the original statement, which is what happens with small caps and retail in particular. We can get into rates and all of that in a moment.
Okay.
But looking at
the small caps have, during this whole blow off rally that we've had, all we did was move sideways in the Russell for a long time before we broke down. And,
exactly.
This was kind of the breakdown. Go ahead.
Yeah, no, you're absolutely right. There are two viewpoints. If we zoom out, we could see it really hasn't done very much. In fact, when it ran to 200, I had already predicted if it couldn't get through 200, that was probably going to be the stop of the rally for everything else, and it was. And now it went down to 170. I think it ticked a little bit slightly under, but came right back through 170. And that was the bottom. So here we are between 176 and 177. And with the numbers that came out today, and the market's coming off a little bit. I just looked over to the right to see my ticks.
Yeah.
177 was also a very key resistance level, and we couldn't get through it. So now here we are in this battle between.
Look at the weekly, all these weekly moving averages that we crossed and broke down and tried to test it, and 170 gives way. This measures 140. I know it sounds aggressive, but that I'm just looking at the picture. So 140.
It doesn't sound so aggressive, Dale, because we haven't even talked about the backdrop of what's going on around the market, and we'll get to that. But and retail, put up XRT too. So let's take a look at that.
Okay.
Well, I'll talk while you're looking at that. But sorry. So
okay.
XRT to me has always been we just looked at grandpa, right? Small caps, grandpa, grandma. And I know people probably think it's pure silliness, but it's not. I can't tell you how many years I've counted on the economic modern family to give us a really good picture of the macro. And the retail sector, which in that XRT includes both discretionary and staples. And that's why I really stick to that particular ETF. That too went down to 57 and popped. But again, where's the pop been? It hasn't been able to get through 61. And that 57 is also that 6 to 7 year business cycle, which means if it breaks down, regardless of what you're hearing, it could actually be very negative for the market. And instead of the great rally that everybody's expecting for Q4, instead we start to go down. We know October can go either way, right?
Yeah.
So these two areas to me are the most important thing. And then the third thing to watch really here, and I heard you talking about it before I came on, is the long bonds and the
Yeah.
junk bonds. And the ratio between those two and the ratio between the long bonds and the S&P 500. And, you know, love him or hate it, but Michael Gayed talks about this all the time, because really what he's watching for is that relationship to flip. And I heard you say, Dale, we've been in risk on. It's true. Since April, these corrections have not flipped to risk off, maybe risk neutral a couple of times, but not risk off. If TLTs start to outperform, and right now they are down a little bit, but they broke out of a 10-day moving average, which they hadn't been above since September 1. So it was a 6-week breakout.
You have
If
an
they
island
continue-
bottom. This is Paul Island right here, where you have all these candles, these people trapped in their shorts. So
Yeah.
yeah.
And we also have that kind of similar in gold, which we'll take a look at. But
Oh,
the
yeah.
point is this, is the TLT, you have to watch the ratio now between the TLTs and the SPY, which they can both go up together and they can both go down together. We've seen that.
Yeah.
But what's more important is what the performance is to one another. So if TLTs start to outperform the SPY, that's risk off.
That's
And
new.
people should tell, yeah.
Yeah.
That would be new since April, and it's risk off. So that's what we're watching for right now. It hasn't happened yet. So I'm kind of been in more cautious mode when it comes to equities. As I said, the quants followed the growth. That makes sense. It's been in a lot of different things throughout the whole year that have done very well, believe it or not. Earnings mid-caps, strong earnings mid-caps, that quant has done the best. It's up like 40%. And I mention them because to me, like I said, it takes all the emotion out and it goes pure math. But
How
from
about long treasury, short high yield?
Well, that's another really big important
Because there's your
ratio.
high yield, which held up the
Okay.
best during the slaughter of treasuries. Everyone was calling the sovereign debt crisis.
Exactly. And this is, Dale, so right on, because this is another, besides the TLT SPY, you have to look at the high yield, high debt relative to the long bonds as well. And they have. High debt has been outperforming the entire time.
My God,
that would be.
I would ask everyone, Mish. I said, do people have more confidence in junk repaying the coupon, paying the coupon and paying off the bond than they do in treasuries? Because that's the way it seemed.
That's the way it seems, which is really hard to believe. But yeah, but you know, whether you want to question the logic of it, to me, again, it's all about the ratio. And these junk bonds are fabulous to watch because like in 2020, they started breaking down before the COVID announcement. They were breaking hard. So were corporate high grade bonds. But I was particularly interested in the junk bonds. And now they've held up pretty well, which is why I haven't been able to get bearish yet. So, you know, there's like 4 things right there. So there's the IWM, there's the XRT on that 80-month. They break last week's low, not so good. And then there's these relationships between junk, long bonds and SPY. And that really, if you want to sort of time the next move, just watch those 4 things. It makes it relatively simple in terms of the macro for equities.
Okay. And we're just getting the first whiff of this starting to happen here.
A whiff, exactly.
A whiff. Okay,
A whiff.
so you know, you don't get carried away. It's okay to miss the first wave out of anything. There's always a correction to trade on and wait for confirmation. But I love your inter and intermarket relationships. So why don't we talk about gold since we just covered bonds? I was looking for 1800, it seemed like forever. And we got to that 1810 level.
30. Oh yeah, it was 18,
Yeah.
depending on the contract you were looking at.
Oh,
Yeah.
okay.
We've been watching December.
Oh, okay.
Yeah, December
I'm watching
futures.
spot.
Right,
So-
spot. Well, so December got to 1830. It's
Yeah.
now trying to creep its way back up to 1900. Dale, I started out this year thinking, when this is when gold, in December was trading around 1500, that we would get to a double at the end of this year, which of course would put it somewhere near 3000. And we've watched it go up and down. And of course, this spectacular sell-off that we had coming into last week. which also left, if you look at GLD, an island bottom with a nice gap up, which as long as that doesn't get filled, looks pretty bullish. So now we're saying, well, can this really continue to go up from here? And clearly the momentum, we had a mean reversion in the momentum, which was good. We've had this pop, which is good, but we may not necessarily watch the gold just from a technical standpoint here. And this brings us to what is going on. So besides the horror of what's happening in the
There's
Middle
the
East,
island Mish is talking about. So I didn't even
exactly.
notice that. Okay.
Right. What besides the horror of, and we're in a bear phase, by the way, in gold, because you can see the 50 has crossed below the 200. That makes it a bear phase.
I think there's a shot for one more low, and I think a lot of it coincides with the dollar. I think there's still another push up in the Dixie towards 109. We've stalled at the 50% level, but 61.8 is 109. So whether the dollar goes to 109 from here or pulls back to 4.5 or 105, I think that the dollar has, one more hurrah left in it. What are you thinking on the dollar?
Yeah, well, I know, and I know you watch the FX so carefully. And what's interesting is I've become much more focused on it because I've been making these videos for CMC markets overseas, and all they want is dollar and dollar pairs on a short-term trading basis through futures, which has brought me back into a futures mindset, which has been kind of cool. And so I can actually speak off the, with numbers that I know. So right now, what I haven't been that impressed with the dollar here, as much as one would think it should be up much higher, given all the factors that we have going on. So I'm looking at that 105.50 level in just pure cash DXY. In terms of the dollar pairs, I also have been very, very keen on the dollar yen. And it seems like if that breaks under 148.50 and the dollar breaks under 105.50, we can actually see the dollar go down. And I've seen arguments about the fact that the dollar can't go up because we have so much money, debt as part of the GDP, and it's putting stress on the dollar. So I don't really know exactly, I can't say definitively, but all I can say is that if you look back in history, during other stagflationary periods, the dollar didn't crash. It went down a little, but as soon as we saw our way out of that stagflation, when interest rates started to go up, the dollar, of course, went crazy to the upside. So you've got these delicate balances here between what yields do at these levels, what the dollar does at these levels. And then on top of that, gold could be its own animal because of all the pressures that we're seeing geopolitically. And of course, so much depends on what happens, whether or not it escalates into Iran, how much US gets involved. All of this is unknowns at this point. And it's really hard to follow
not to me, because I followed the career of Bibi Netanyahu for a long time. And it's been forever his goal and mission to confront Iran militarily. He came to Congress many years ago talking about that Iran they're developing the nuclear weapon, and has talked about how Iran says they want to wipe Israel off the face of the earth. He's getting older now, kind of like a Putin scenario, where if you're going to accomplish anything that you think has to be done, it's now or never. And I think that there will be a conflict with Iran. They're playing it down now and saying they can't tie it, but what they can say, well, we're getting ready to hit you in 2 weeks, or we don't believe that you were involved.
It's what you're saying is extremely possible. And so that has to be a bullish case for gold and a bullish case for oil. And I wrote a whole daily about that yesterday.
About the Strait of Hormuz. Tell people what could happen if we have a mess with Iran in the Persian Gulf.
Oh, well, listen, I'm old enough to remember some wars.
I remember trying to pick you up when we were waiting in a gas line in the 70s, Michelle.
Exactly.
You wouldn't give me your phone number, so I just waited for gas. Anyway, I remember those.
Well, I mean, let's step back. The parallels between the 70s and now, I know people have
Amazing.
been writing about it. I've certainly been
Yeah.
writing about it since before this year even began, because you can kind of see what's happening. It's not just that situation, but think about even in this country, all of the social unrest that we're seeing through
Yeah.
strikes. You haven't heard about this level of union strikes since the 70s. The theft, the
Right.
organized theft, but nonetheless theft. Obviously, the crimes are out of control in this country. And here we have now a new division and these rallies on ideology, which I think half of people don't even understand what ideology they belong to. They're just massaging anger. There's so much anger because people don't trust anything. They're paying higher prices for everything. And their interest rates are higher. And even though the economic news is that people are more solvent than what you would think, and there are people who certainly have put out those statistics, there's also a whole group of people in this country that are barely able to keep up. And we heard in the jobs report, working 2 jobs now, 2 part-time jobs. So that makes you add all of this together, and then the spike of what could happen in the Middle East if it does go into Iran. And you could basically jump on that oil wagon now. I mean, we think that $80 a barrel is your rock bottom support. I saw oil was up a little bit this morning in the pre-market. If you're looking at USO, I wanted to see it get back over 76.
Yeah,
I think
former floor traders got to love how crude came back and filled the gap it left.
Oh my God, it was like,
higher,
that's a technical perfect situation. Yeah, technically perfect.
It gives you
And
comfort. It gives you comfort, right?
It
Because you can
does.
see it.
And if you look at the 80-month moving average, just like we just talked about with small caps and retail, it's over it. Okay, so why is that important? It has not been over that 80-month moving average. So that's that 6 to 7 year business cycle. But for 15 years, since 2008, except for the first few months of 2022, before Russia, Ukraine, and also then it started going down because of interest rates started going up, and the Russia, Ukraine seemed to kind of level out. But now, the last 3 months, it's back over. So if and this is what I wrote, trend is your friend, right? If the trend is your friend and this is going to explode up in a new cycle bullish, why not 110? Why not 130? Why not higher? Especially if, like you say, Dale, in a couple of weeks, we start to see Israel and Iran going at it. And then, of course, you have to wonder what happens with all these other countries and the alliances that we've seen with BRICS and Saudi Arabia and Russia, and where does China fit into all of this? I mean, it just brings a lot of questions into mind. So to sum up, I like oil. I still like oil. I like gold here. And even though, as I mentioned, the quants are long a bunch of stuff, in terms of the discretionary trading, I've been very cautious about things, getting into too many things. I really wouldn't mind being even heavily more into commodities. We've been in DBA seems like forever. That's the agriculturals. They got beat up, but that will go back up if things escalate. And DBC, which is kind of a nice exposure between metals and oil. All of these things have corrected, but they're all still doing well relative to some of the other sectors of the market that have gotten hammered. So there you go. I mean, that's kind of what I'm looking at.
It's a toxic brew, isn't it, Michelle? I mean, every recession, every one, no exceptions, has started with oil shocks.
Absolutely.
Everyone.
We are talking going right back to the 70s. There we are in the 70s. That 70s show. Yeah, because in 73 we had
I don't remember them.
Well, I read. Well, I mean, just 73 we had the embargo, right?
Yeah.
And then we went down into a major recession after that. And then in CPI went from 14 down to 2. Then in 76, it went from 2, by the time we got to 79, up to about 18, 19% until 1980, of course, when the interest rates started going crazy. And it's almost like we're doing the same thing. So, I mean, enjoy the rally now. You can see the market's up, but be very, watch those small caps and see if they can get through 177. Yeah, maybe we have another leg higher. You ask Jeff, our partner, he thinks the market's going to scream higher. I'm really just going to be more agnostic about that and keep my eye out on some of those commodities plays and the bonds as well, and the dollar.
All right. Well, Michelle, this is where people could find your work. I put your website up.
Thank you.
Anything you want to say about it? Where,
Well, you
know,
can
people,
find Market Beat is where all the commentary is. Keith and Don Goodman, who works with us, they write an outlook where they give you all of the risk factors according to our big view. That covers everything in terms of McClellan's and relationships, everything I'm talking about. My daily's there. And also at Market Minute, which is my X handle. I'm really open to answering questions. I like to help people. That's been my goal in life, to serve. And yeah, other than that, you know, media tab, if you want to see what I've been saying in the media, I give a lot of picks there because quite often people want to know, what are you looking at, Mish? So there you go. And that will give you a good idea of how to figure out what we're doing.
Oh, I see you as a light for the public when they look into the markets and they see darkness and shadows, and they don't know, they're bumping into, you know, different things in the closet, that you are like a switch when people turn it on that add clarity to a complicated business.
Oh, well, thank you very much. Thank you. I do follow a very wise yogi once said to me that when Tibetans got captured by the Chinese and they were kept in the darkness, they actually found gratitude to their captors because in the dark they found internal light. And that always stuck with me, because this too shall pass, finding internal light, especially now, like I said, when people want to massage anger, and they have legitimacy to do that. But as a trader, it really helps keep you more focused on what's going on and not what you think or hope or want to go on.
Yeah, price is king. And you're the queen of intra-market relationships, Michelle Schneider at Market Gauge. Check her out. Make sure she's part of your intelligence gathering. I learned today, every time we talk, I learned something. Michelle, thank you for your time today.
Thank you, Dale, so much.
All right. All right. So we'll talk in the winter. Have a great fall trading season.
Exactly.
All right.
All right. Well, then, happy holidays.
Happy holidays, Michelle.
Okay.
And
go
ahead.
No, I was just going to thank the viewers
who
watched as well today.
All right. And thanks for saying yay, like you were excited to do this interview. I appreciate it.
I always like talking to you. All right.
Thank you.
Bye,
Michelle
everyone.
Schneider at Market Minute. Take at least 1 minute to click her, follow her, and pay attention. Keep an open mind, and your account will stay open. Thank you, Michelle.
Thank you.
All right, that's a wrap, everybody. You could join the team in about 18 minutes for the morning edge. Don't just count your pips, count your blessings. And we'll see what happens into this solar eclipse, huh? Michelle, you can be able to see the ring of fire?
Oh, yes. Oh, we live in Santa Fe, which is supposed to have some of the best viewing. So I bought my little $2 glasses.
Okay. All right.
And we're having a little party up on our sunroof.
Oh, God.
Yeah, it's going to peak here at about 10:30 in the morning tomorrow. So we're really excited about this. This is not going to happen again for like 22 years. So
yeah, the ring of fire has never happened in the U.S. That's a long time.
Yeah.
So,
this is really cool.
So look for a lot of reversals into this eclipse, either before or right after this weekend.
I will say in 1987, we had the harmonic convergence right before the stock market crashed in October of 87.
So don't tell me that the heavens don't send messages. All right, Michelle, take it easy.
All right, bye, Dale.